Now, moving further, the next one is, of course, another burning topic, how to keep those shopping carts fuller. So this next one is titled as Faster Payments, Fuller Shopping Carts, How Data-Driven Payments Reduce Card Abandonment. That's what we will now be diverging into and getting on to. So I'd be inviting on stage Mr. Karthik Narayanan, who's the co-founder, CPO, and CTO, INAI, to kindly be joining us to moderate this session. And on the panel, we have Mr. Raghu Ramanujam, who is the Director of Product Flipkart, Mr. V. Chandramauliswaran, who is the Senior Director and India Site Lead for PayPal, and Yvonne Szeto, who is the Vice President Commercial Global Enterprise eCommerce APAC, Worldpay from FIS, to kindly join us onto the stage to take on this session head on. Welcome in. All right, there we have our panelists, ladies and gentlemen. Let's welcome them with a round of applause, please, would you? There we go. So, Karthik, the stage is yours. Please go ahead.
Right, thank you. I'm not WhatsApping here, I'm just having my notes in here. So, thank you all for spending time in here. Without any further ado, I'll probably start off with like a quick 30-second introduction about what each of us and our companies do. Let's start with Yvonne first.
Thank you very much, Karthik. Hello, my name is Yvonne Szeto. I am the Commercial Vice President for Worldpay from FIS in the APAC region. A bit about our company, who is Worldpay. Think of us as a one-stop shop payment service provider where we offer a flexible and easy-to-use payment platform that includes a multi-currency payment gateway, acquiring for major card schemes, processing for popular alternative payment methods, shopping cart integration, fraud screening services, and more. All under one single integration and one master merchant agreement.
Mauli.
Yep. Hey everyone, my name is Mauli. I work at PayPal. I thought Yvonne was just describing PayPal. I was just joking. So Worldpay and then PayPal. We do something very similar. Global payments player. The thought process that we have is how do you use payments as an operating system in people's lives to essentially improve the health of everyone in the world, right? That's how our Uber mission statement. Personally, I've been with PayPal for more than 12 years. I work currently in the credit risk, seller risk, and collection space. Great to be here.
Hey, my name is Raghu here. I lead payments and co-branded card program for Flipkart. Flipkart is a leading e-commerce player in India. Some of the key problems we are trying to solve in payments are in terms of how do we digitize Bharat, right? We've all talked about digital payments. This whole session is about FinTech, digital payments, and so on. But in a lot of ways, Flipkart largely invented cash on delivery as a construct for India. But we are progressively trying to see how more and more of our transactions can be done on digital. So the mission for the team really is how do we digitize Bharat, bring the next 200, 400 million customers into making digital payments on e-commerce specifically. That's the mission that we are trying to solve here.
Thanks. And I'm the co-founder of INAI. We're a payment orchestration company. We essentially solve for the time that companies take to integrate with multiple payment providers, multiple alternate payment methods that have to be offered across the globe. Our pitch is typically 6 continents, 60 minutes. INAI is the only integration you will ever need. And I have 2 partners and one profile of a customer sitting here on this. And so we'll kick this off. Very quickly, the team actually suggests that faster payments actually leads to fuller cards. Do you view this as a causal relationship? Is it only faster payments that's going to give you fuller cards? Maybe start with Yvonne.
Thank you. Faster payments can lead to fuller cards. If you think about some of the newer technology like contactless payments, which removes the touch of hardware and sometimes even humans through self-checkout kiosks, it gives the buyers confidence that no matter what they're buying, the steps at payment is going to be faster and less complicated. With the, I guess, the pandemic, another very popular payment method that's fast and frictionless is click and collect, where you can pay online and collect your goods in-store or offline. And these, really efficient ways of shopping does help with increasing basket size. But are they the only factors? No. Our studies indicate some other factors actually have a bigger impact in terms of basket size. Some of them include the offer of a convenient returns policy. That's a real safety net for shoppers, which influences 90% of buyers whether they will buy with you, and an equally high percentage of customers how much they will buy with you. Another one is incentives, such as free shipping if you spend over X. I'm guilty, I fall for that all the time. More recently, we have financing options such as buy now, pay later, which gives the buyer immediate possession of the goods with the freedom to pay back over installments, varying tenures from 15 days up to 6 months. And I'll finish my last point and I'll hand over to my peers here, which is new technologies such as augmented reality and virtual reality. They provide an immersive experience for the shopper, and I believe that they're going to play a big part in terms of the future of shopping and influence how much people will buy.
I think it's going to be a tough act for the second and third and fourth person to follow. I see a trend setting here. Yvonne covered a lot of points that probably on top of everyone's mind. A few things that I want to add, right? Not necessarily repeat, but I think, as Yvonne said, it is partial. The fuller story probably is like everybody wants to know about the customer. I think getting to know the customer is also an important part of this puzzle. Because the more you know the customer, the more you can personalize the shopping experience and the payment experience. And it's a very important aspect. Yvonne touched on a lot of the pieces around incentives. Some of the other pieces, right? I think just transparency in terms of costs, in terms of delivery options, in terms of making sure that the whole trusted feeling that I get when I interact with the site, very important. And you kind of need to evolve with, the customer. The previous panel spoke about, customer first and product second. The idea is that the product has to evolve to meet what the customer wants. And so in this scenario, your shopping experience and the checkout experience, the payment experience go hand in hand. And either place you see a challenge, you're going to basically start seeing, not fuller carts, going forward. And as we go along, we'll dive into some of the other aspects as well, which are very important for both these pieces to go hand in hand.
See, I'll make the question slightly more broad-based in terms of what leads to fuller carts, right? We can definitely think about at least 4 factors from a pure e-commerce perspective, right? One, at some level, it all comes down to a fundamental trust on the platform itself, right? So we rank product quality that we sell on the platform as an important factor which determines your cart size. Delivery reliability as one more factor that very, very strongly influences fuller carts, larger purchases. The third point that we talked about is fundamentally on the payments. On the payment side, I'll talk about both faster payments and more secure payments, right? Think about the whole customer mindset when they are making a payment on an e-commerce platform, right? As against a retail kind of setup, right? The customer has not got the product. The customer has not seen the product, right? And they're going to make a payment fundamentally based on the trust they have on the platform, right? So solving for product quality and delivery reliability. And I'll top it off with one other factor which is also very critical in the whole trust building paradigm, which is how fast can you process refunds in case of returns, right? Refunds we have found is an extremely high anxiety point for customers. Let's say we promise something should be shipped on day 3, right? there is slight customer discomfort if it's delivered on day 4, right? But take the case of refunds, right? Which is also something that we bake into the whole part of payments and refunds as a charter within Flipkart. Refunds is an extremely high touch point. One, the speed of refunds, and pretty much you're giving visibility to the customer in terms of where their refunds are. It's being processed, it's with the bank, being able to give the customer visibility into entire refund cycle in terms of when the money is actually hitting the customer's account itself. So I'll fundamentally talk about product quality, delivery reliability, faster secure payments, and faster visible refunds. That's how I would articulate it.
Oh, absolutely. I think one of the things that we saw was there was an uptake of up to 60% in terms of card conversion rates when you had the most modern payment stack, in the sense that the right payment options actually presented for every geography, and also, you know, quote unquote vaulting, which is the faster checkout, the quicker checkout in place, not compromising the security, because that's the other end of the double-edged sword. And I do remember a nice anecdote that Mauli actually mentioned. He said that there was somebody who entered for the CAPTCHA. It says 71 plus 1, people are expected to enter 72. And there was a slightly older gentleman who entered 71 plus 1 as is. And so those are great insights into understanding understanding the user as well, having analytics and having probably ways to get that information as well into you. You did mention the BNPL part. How do you actually see that impacting the card conversion rates?
I don't know if I should go first. I've gone first a couple of times. I'd be happy to talk about buy now, pay later. But Muli, why don't you go first?
No, thank you. I think, as Yvonne mentioned, at the end of the day, from a purely, e-commerce player or merchant experience, at the end of the day, whatever is in your arsenal that you can enable the customer to complete is how you should think about it. And BNPL, is a very, very powerful tool. We've kind of all grown up with BNPL, right? It's a fancy term now, but it's all the in-store, Kirana store, EMI, I'll pay you tomorrow, I'll pay you day after. That's the experience we've all grown up with. But it's now digital, BNPL. For sure, in India, at least, what used to be like a $3 billion market for BNPL, 2021, now is probably in the next 3-4 years going to look like $50 billion. That's the kind of uptake that you're seeing in India. And, even globally, we're seeing huge uptake for BNPL. PayPal also has several BNPL solutions, like Yvonne mentioned, right? Like you pay monthly, you pay once in 3 months. There are different flavors of BNPL. For us, for sure, we are seeing higher checkouts. We are seeing smoother checkouts. Because at the end of the day, it's an experience that you control end to end, right? And so from that perspective, it's easy for us as a payments player from a conversion perspective. Also, for us, I think what we tend to see is that in general, delinquency rates in general tend to be lower because we know the customer, and this is something that came up in terms of just knowing the customer and personalization as well. And so for us, it's an opportunity for us to essentially retain the customer within our own ecosystem. From all of those perspectives, we see a lot of value in BNPL, and it can be a great cross-sell and also a great entry point into PayPal as well, and then continue to grow the customer. So from all of those perspectives, BNPL adds significant amount of value for us.
You're going to decide who goes next.
Okay, I agree with everything Willie just said then in terms of the slick user experience. I think a slightly different perspective also is the fact that there's a really big gap for consumer lending. I think if you look around the world, it's getting harder and harder for people to get a credit card. In India alone, I think out of like the 900 million banked customers, less than 4% have a credit card, so that's less than 30 million have a credit card. The other little secret why buy now, pay later is so popular is 63% of Gen Z and millennials don't have a credit card. and they represent about 40% of the total world's shopping population. And they're very averse to credit. Even if you give them one, they probably won't take one. They prefer debit or just to pay with the money that they've got. So that's a big, I guess, target segment for buy now, pay laters. And merchants love it too. Don't forget the other side. Merchants love it because they're seeing an increase in 10 to 15% in terms of conversion rate. They're also seeing an increase in average ticket size of at least 30%. So these are the drivers for buy now, pay later.
Yeah, I think the conversation has been more about the convenience of buy now, pay later. For Flipkart, it's also a very interesting new customer acquisition strategy for us, right? As somebody or a monthly active customer driver, as far as Flipkart is concerned, somebody who would have otherwise delayed a purchase that they actually want now can suddenly have that option to secure that product at this point of time. But I mean, on a personal front, if I were to look at the buy now, pay later trends, I would also throw in a slight cautionary note in terms of how anything that has the sort of visibility and hype it has now comes with its own set of challenges in the medium long term, right? So yes, all these platforms have data, right? But when you're looking at data and you evaluate somebody has a credit worthiness of, say, 10,000 rupees, and there are suddenly 7 platforms that have given the customers 10,000 rupees each, right? Now, how does it pan out in the medium long term? I mean, Mauli from the risk side knows the in and out of how these would pan out. Those would be interesting but good problems to have, right? Industry will go through a period of rapid growth, massive adoption, have its own teething challenges in terms of how it pans out medium term. And over a period of time, next 3-4 years, it will settle down into some sort of equilibrium where India too becomes a country where credit scores are more prevalent, which is really where the problem is, right? The problem for credit card penetration in a country like India is the whole notion of credit scores and credit worthiness is not very ingrained in us, which has to change. If BNPL is what is going to drive the transformation, happy to see how that pans out, but that's the cautionary note I would throw, you know.
Absolutely, absolutely. And I think one of the things that we saw, just switching gears onto this fraud aspect of things, is usually, especially for cross-border companies. To give you an example, there was a cross-border company of ours which wanted to transact in India, and they were not domiciled largely in India. So they actually had to go ahead and accept PAN numbers at at checkout, which obviously doesn't please the product manager there because it is actually coming at the expense of customer experience. So regulation on one side, customer experience on the other. How do you actually view this?
Come on, Raghu.
Sure. Thanks, guys. So let's say you're interested with cutting trees now, right? You're a woodcutter and you're required to cut n number of trees. Let us say somebody is not cutting trees, but is sitting around and sharpening their axe, right? Would you count that person as not being productive, right? That is probably how I look at the whole regulation bit, right? I mean, UPI today has done a tremendous job in terms of the overall security on the overall digital payments ecosystem, right? It has come with its own price. My team has invested enormous amount of time on the new to come tokenization regulation, but at some level we see it as an important enabler to build customer trust. So regulations are an overhead, but think about it as a woodcutter stopping to sharpen his axe rather than chopping away with a blunt axe, so that they can swing more impactfully and get more effective at whatever they're doing. So it's an important factor to take in and understand that the regulations in the long run help you deliver higher trust in the ecosystem, and therefore overall adoption increases, you know.
Okay, sure. I think fraud management and customer experience is a tough balancing act. You don't have enough fraud focus, then that leads to increased losses. You tighten it too much, that leads to loss of revenue through cart abandonment and false positives. In fact, conservative fraud management isn't just the loss of that particular sale. It's been estimated that the untapped customer lifetime value from actual genuine purchases but were declined for false positives amounts to $443 billion per annum. So it's really massive. Luckily, these days, we've got some really sophisticated fraud solutions that leverage on AI-driven technology that really provides that better balance between fraud management and reducing false positives. As it relates to overall regulation and balancing that with making sure it doesn't hinder the customer experience, it's I guess just a fact that most organisations have to face in order to protect the end consumer. And I think it's just about thinking more about the design of how you obtain that information from the client, making sure it's built into the actual purchase journey or the onboarding journey, making sure that there are no breaks in the flow, minimising any duplicate sort of request of data, to make it just as seamless as a possible experience.
Absolutely. I think I agree with what both Raghu and Yvonne have said. I'm going to add a few flavors. If you think about our Ola Uber experience here versus Uber experience in the US, they're very different. Like if you think about the Uber experience in the US, you go sit, you book a cab, you sit in the cab, go to the destination, you get out and you walk out. Payment is invisible. Okay, that's the kind of experience in the US. In India, if you're not a wallet, let's assume, then there's a two-factor authentication. If there's no two-factor authentication, you get worried, like something wrong has happened. So we are used to friction, and so this is actually a good analogy to think about regulation. There are certain markets where, you basically regulations, across the board, to what Raghu said, regulations are an enabler. It builds trust with the customer, but depending on the regulation that is there in the geography that you operate in, you can build the product to what Karthik said in terms of customize or personalize the product to that kind of regulation. Very important, because at the end of the day you have to think like that for the customer. It's super important to get that trust. On the fraud piece, see, at PayPal, we've gone through this journey over 2 decades or more than 2 decades. For us, right? The way we started thinking about fraud over the last 7-8 years was we started thinking about it, completely. We flipped the thought process. The idea was not to catch the bad guys, but actually allow the good guys to go through. It's a very different thought process, and so we went through that transformation, to make that change. Now, it's easy to say that, hey, fraud is important. You have to tackle fraud across, everything that we've spoken till now, right? You think about card abandonment or, fuller cards, faster checkout, all of those things. There is an underlying data layer that we've not touched on, and that becomes super important no matter what you're tackling, right? Whether it's a regulatory aspect, how we manage data, how we protect the privacy of a customer, how do we manage fraud, how do you personalize, how do you enable, faster processing, all of those things. Data becomes important, and that is a foundational layer for all of the aspects that we've spoken about.
Can I add just one point to that? See, as somebody looking at the conversion funnel and a product manager, I would do anything to completely get rid of OTPs, right? I hate OTPs, right? But when we listen to the customers, and the thing that was indicated too, customers actually love OTP, right? They feel secure that the money is not going out of my account unless I put the OTP A, B, C, D or whatever 7564 and actually complete the transaction, right? Is it faster? It's not. Is it frictionless? It's not. Is that what the customer wants? Absolutely. I mean, you would not want a customer where you just get off the cab and walk away, the payment moves, right? Customers like that friction, and if that's what the customer wants, I don't think anybody is going to argue with that and not do that, so.
Maybe that's a generational element as well, if you think about it, right? As we talk to, we do a survey of 34,000 customers at Worldpay on an annual basis just to get their feedback in terms of their preferred payment method. And we do find there are generational differences. I guess the tech-savvy millennials and Gen Zs, they do love that one-click experience. And I think it's overlaid with other technologies such as biometric authentication, which relies on unique characteristics like your fingerprint or your face, which is hard for a fraudster to sort of emulate that. So I think there's that component, and of course, the older generations like your baby boomers, they do tend to be a bit more cautious, and perhaps having the one-time payment serves them well until hopefully newer technology brings them a similar level of comfort and in a more seamless way.
And that's super insightful, because what I see is there are so many dimensions to it. One is the regional aspect to it. A few people feel that it's fraud checks are great. A few demographics, it's not. Another is the generational aspect that you spoke about. And how does a product manager actually run so many experiments, especially when it's a cross-border case? Because what I hear from the companies that we work with is they spend like hundreds of thousands of dollars in just running these experiments. Even if they have to run like, say, 24 experiments a year, 2 sprints a month, and so much. It's like they have 24 shots at running experiments here. So how hard is it to run these product experiments? What are your experiences when it comes to, maybe I'll double down on specific questions, 2 cross-border companies. How hard is it? How more complex is it when you actually do this for multiple regions? And for Flipkart, I think the question would be, we all would love to hear how Flipkart runs its product experiments. What does your stack look like? How do you run your product payment experiments? So maybe we'll start with India and then go overseas.
See, more than the stacks, I would talk about how we have looked at the customer segment itself and started evaluating what is the best solution for them, right? And anybody running an e-commerce kind of setup knows what the whole cash on delivery experience is, right? Fundamentally, even when we talk about, we have also looked at the whole customer journey from cash on delivery to something like digital payments, right? So we talk about, say, 400, 500 million UPI customers, digital customers, and so on. But we have actually looked at how customers actually transition from cash on delivery to something like digital payments, right? It really starts with Kirana and offline retail is where they start doing their UPI transactions. Then it literally moves into your bill payments, utility bills, mobile recharges, and so on. Then it actually moves into something like instant gratification platforms like your food delivery, possibly even online ticket booking. And then you finally cross the summit and start doing digital transactions on e-commerce, right? So being able to understand which real part of the customer journey that the particular customer in, and being able to tailor the experience for the customer is how we have thought about the whole digitization charter itself, right? How do I transform the customer from a completely cash on delivery to digital? For example, for us, it is a lot about gradation of these customers across these journey chains, so that we can literally personalize across, is it UPI, is it card, is it whatever wallet kind of instruments and so on. So it's for us less about the technology stack, more about the customer segmentation in terms of how we have looked at and personalized experiences for these customers.
So I think Raghu hit on a lot of good points. I just want to add a few. I think it's, the realistic scenario is that you build, Raghu and I were joking about the platform piece, but, Raghu, if you allow me, so there is a underlying platform that is, truly something that you build, in a scalable way, right? So if you assume that there is a platform that is there, or the platform essentially gets built over a period of time, and the product also gets built over a period of time, right? I think in a sense, it's where you start. There is a starting point, and you tailor the experience to that starting point. Then you start expanding those experiences to, say, other geographies. This is how, in reality, products get built. it's very hard for you to think the world and then go and solve it. And so it is a lot more sequential, and that's the reality. Now, the challenge, and sometimes a lot of debt gets created for companies, and it's sometimes a costly proposition, is only because that it's hard for you to anticipate what other geographies would want. In a sense, there are local nuances that you always have to factor in. And like Yvonne said, maybe there are generational factors that you have to capture as well. And so it's very hard for you to get that that product. And so it is ever evolving. I mean, good product managers help you bring some universality to the product, and that minimizes debt. Another angle here that I want to bring in that maybe we don't think about sometimes is that technology around us evolves as well. Like, for example, I am playing a game, like if you go back like, 7, 8 years, when Facebook, games on Facebook became very popular, I'm playing a game, and in that game, if I have to buy something, right, like buy a coin or, pay for some farm or something like that, right? I don't want an experience where I get out of the game, make a payment, and then come back into the game. That is exactly the opposite of what that customer wants. And so, not only geographical, but maybe how the world around us is changing, you have to kind of factor those pieces in as well as you think about your product and build products. And so you kind of keep scaling your product in all of these aspects. And so it's a ever learning, ever discovering journey that you are on.
Thank you. I'm going to provide my input purely from the perspective of payments processing, in terms of how does a business decide if they want to go global, how do they think about payments. It's really hard. I think, you have to rely on business partners, payment service providers that have the experience and the scale that have gone into those markets, understand regulation, understand scheme rules, because they do differ region by region. An example is in Europe, two-factor authentication through 3DS authentication is now mandatory. It's not the case in certain parts of Asia, nor is it in the US. So these are some of the nuances, which is really very complex. I'm oversimplifying it. But the importance of that is engage partners in the payments ecosystem to get a full understanding before you go into the market. And then more generically, if you do have, you want to run a cross-border business instead of going in-country, it's about localization and making it look and feel as if you're in the home country of the buyer. That's really important for building trust with your customer so that they can consider buying with you. Localization can range from making sure that your website is in the local language of the buyers you're trying to attract, as well as making sure you give them the option to pay in their home currency. 57% of customers have said, that's a real bugbear for them when they go onto a website and it doesn't have the currency that they want to pay with. So I think those are just some of the simple things to keep in mind, and of course consult experts in this field.
Oh, absolutely, absolutely. I can relate to one of our customers who said that they had an uptake in payments when they changed from tile-based, the payment options mentioned as tiles versus being presented as checkboxes, because their customers in that particular region were just used to seeing checkboxes and radio buttons in there. And it was a double-digit % increase that they saw in this. So that's super insightful. I think we have 8 minutes there. A quick word for every product manager out there from each of you. Okay, I'll tell you. We'll start with Yvonne, then Mauli, and then Raghu.
I'll make mine short and simple. It's estimated it takes approximately 22 clicks to complete an online purchase. And I think with the rise of digital payments that are much more simple, like a one-click type application that you get with digital wallets, it's important for merchants that are still using legacy ways of checkout experience. It actually is disengaging with your customer and them advocating for you. It's also, I guess, in this environment where it's highly evolving, digitalized world, putting you at a competitive disadvantage. So the key here is to ensure that whatever you're thinking in terms of, in terms of growing your online funnel, think about the payments aspect. That's a really important component, not just what you're selling. because it's all about convenience for your customer. They're all looking for that hassle-free, convenient way to shop. So don't give them any excuse or reason to second guess whether they should go ahead or not with the purchase. Keep that front of mind.
Yeah, no, the way, yeah, I agree with everything Yvonne said. I think the way I would think about it is, probably two aspects. One is product managers have to be customer champions. I think they are your, representatives of the customers within the company, and so, you have to be customer champions. Number two, I think the way the world is evolving, I think having a strong tech orientation helps a lot for good product managers, right? So there's a blur. Sometimes you're called tech product managers as well. I'm not saying that there's no value for a non-tech product manager as well, but when you think about some of the geographical, nuances, the localization, the personalization, building at scale, having a tech background helps a lot in enabling that conversation with your tech counterpart, the development counterpart, and so those are the two things that I would highlight.
The area where I would want to highlight is in terms of, as product managers, a lot of think about ourselves as having a lot of insights about what customers want, customers feel, and so on. But for heaven's sake, don't launch anything without a A/B. Be clear about what are the outcomes you are expecting from the A/B. A/Bs are also extremely notorious for feeding confirmation biases, right? I launched this with an A/B of 5%. It has a 0.87% improvement in the conversion. The 0.87, you are the best judge whether that is really indicative of what you wanted to prove, or if more often it is 0.87, which was just incidental because of marketplace changes and so on. Look for very clear distinction from what you are expecting from an A/B. And for the second time, guard against confirmation bias. It's okay to be wrong, but it's not okay to scale up something that's not working and then realize that you scaled up because you got a 0.87% improvement. You thought 0.87% was spectacular, but it's a rounding off error in many cases. Avoid confirmation bias.
Got it. So the mantra seems to be one of rapid experimentation, and that there's a lot that happens within that little payment widget. So I think we have about 5 minutes. Why don't we open up for questions from the audience?
Good morning. My question is for Mr. Chandra. It seems like you wanted to say that digitalization has improved personalization with your users. That's what I mean. I think Yvonne and you were differing only on one aspect when she said that the purchase happens after, let's say, 22 clicks for approximately, whereas you said that the time frame is much shorter for people who know their customers. So, like, I just wanted to know more about that.
Yeah. No, I think both Yvonne and I touched on the same thing from a perspective that the idea is that you want to minimize the path for the customer to get what they want. That's the bottom line. And so she was giving an example about 22 clicks versus 1 click, which is the experience that we've gone through as well. And so the idea here is that Karthik spoke about vaulting and many other examples. We've had panels from the morning here talk about different forms of thinking about the customer. For us, the way we think about it is very important for that customer to be a PayPal customer. The more we know about the customer's habits, the kind of spends that they do, where do they shop, when do they shop, all of those aspects help us tailor experiences from a, showing the right, the preferred payment instrument to creating a seamless, frictionless, I guess, checkout experience. Equally importantly is for us to manage the, the fraud at the back end, right? And so both those aspects are very important for us. See, I mean, we all talk about availability of 99.99 and so on. All of those things, that infrastructure is important, but equally important is for us to be able to run a lot of the number crunching, in very, very short amount of time for us to get to this. And so If you're a customer, then the idea is that we have a lot of data, static, dynamic, that's coming in that we can process and get you what you need. And that's the thought process that we were coming from.
Sorry, I wanted to understand from Raghu. There is a.
Can you keep it closer? Can you keep?
So, all right. So we all, trying to get more customer on board, right? Where do you draw the line in terms of maintaining the customer privacy and reaching out proactively to him? For example, when I, let's say, Google a product, right? I start getting a message on my other app saying that, this is available on Flipkart or this is available on other e-commerce site. So where do you think, as a companies, we should draw the line to intrude into my privacy as well as reach out to me at the same time?
See, I think the regulations on the privacy front are fairly well established at this point of time, right? And while you can personalize in terms of how you look at customer data, the first question to ask is, do you really own that data, and does the customer know that this data will be used for this personalization, right? If that is the case, you are largely on the right side of the law. If that is not the case, if the data that you use doesn't belong to you, or it's a data that belongs to you and cannot be used for the specific reason that you're using it for, I would broadly look at those as two dimensions to look at how what data can be used and for what, right? And whose data are you using? That's how I would largely look at it.
Hello. Yeah. My question's to Raghu as well. How costly can a bad payment decision be? Like, let's say you went across with a payment infra, or maybe you chose a payment partner, but somewhere along the line something went wrong. How costly can that decision be to somebody like you, an e-commerce website?
See, I think on that side, I would choose to be on the side of being more paranoid than otherwise, right? Payment security in terms of being able to convince customers that we are on the right track, both on the forward payments and on the refunds leg, is extremely critical, absolutely non-negotiable as far as a payment experience is concerned. I would literally highlight it as a code red if there is instances of customer fraud or other kinds of risk involved in the whole payment process. No, that's how I would definitely look at payment security as a very important aspect of anything that we build on a platform.
All right, I'm so sorry, sir. We'll have to cut this short now. The time's up. Thank you so much for that intriguing session again. Thank you.